Before the FOMC, Peter Hag joins us next. Hi, Peter. Thanks for joining us this Wednesday.
Nice to see you again, Daniela.
It's another FOMC day, Peter, but before we get to that, let's talk gold, which fell from its 3.5-month high that it hit on Tuesday. How do you see the metal set up?
I expected the pause. We were very constructive, the gold market, from a few weeks back, looking for a 1325 target. We hit that target over the last couple of days. And, I think a pause in the market is totally justified. It's a little bit of profit taking up here after, a $75 run from the 1255 breach. So we expected this pause. The market is now consolidating, is looking for some new news before it either breaks up through the 1328 level, which would set up for a 1338 immediate test and then a 1355 further test, or a 1313 breach, which would set up a test of the 200-day moving average around 1304.
Peter, let's talk silver-gold ratio now. You were right on the money with this one. Last time we spoke was at 65-1. You were thinking that it could head down to 60. That's exactly where we are at, right?
Yeah, we thought that the mean average for the ratio should be closer to 60 than 65-1. Now, bear in mind, I would not have made that call had I not been constructive on the gold price. If I believed the gold price was in danger of dropping significantly from that 1255 range where we became constructive, I'm not sure I would have been as aggressive on my silver call. But the fact that gold broke up through indicated to me that the ratio on silver to gold was going to tighten, and we called from 65 to 60, and so far it looks like we're right.
Peter, it's another FOMC day. Do you expect any surprises?
No, again, I think the Fed is going to use as an excuse the weather. A lot of analysts have been using that excuse, but I think it will give Yellen an out. To say, look, we're just not sure whether this economic data is accurate. We'd like to give it a bit longer, maybe look at it at March or possibly as far out as April, to see if the weather turns warmer, whether that will spur consumer confidence, and whether some of the other metrics will start to improve. So I think the weather's going to give her an out, and because of that, I don't think she's going to change much of her verbiage from her her last go around in front of Congress in January.
All right, Peter. We also have the G20 meeting starting on Friday.
Yeah, that could be an interesting meeting. Again, there's still some issues with the emerging markets. There's obviously some serious issues within the Ukraine, with 25 people killed overnight. So there is some serious unrest in the European Union. Not that the Ukraine is part of that, but in that area. So I think the meetings of the G20 are going to address some of the concerns on the emerging market valuations of their currencies, some of the trade issues, and some of the cooperation in monetary easing so that they're coordinated.
Great, Peter. Now let's look at a trading range that you're looking at for gold. Yeah,
I'm looking, until I get a better feel. Right now I'm neutral. But 1313 has held over the last couple of trading sessions. I'm looking for that to hold. Certainly, if this market is in a bullish momentum phase, 1304, the 200-day moving average, is a must to hold. And I'm still looking for that breach of 1328, before I'll venture out into a higher number. Right now, I'm very neutral this market. It's consolidating, which is an okay thing. But I think it's going to need some more ammunition to move one way or the other. So, right now we've taken out our positions at 13.25. I'm very happy just sort of watching this market and staying on the sidelines for the time being.
So 1304 to 1333?
Yeah, if you want a wide range, a short trade range would be 1313, 1328 if you want a tighter range.
Got it. Thanks, Peter, and thanks for being with us.
You're welcome, Daniela.
And thanks for watching this edition of For Pete's Sake. Kitco News is headed to Fort Lauderdale this weekend to cover the Gold Stock Analyst Day put on by famed economist John Duty. Will be there with lots of coverage for you. Be sure to stay tuned for that. In the meantime, you can email us at newsfeedback@kitco.com or follow me on Twitter at Daniela Cambone. Thanks for watching and happy trading.